morning, hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, it's a brand new day and yesterday we saw quite a tight session for the markets due to the Adani Group stock rout. Today also we'll be watching out if there is any upcoming developments on that front. However, today the GIFT Nifty is hinting at a positive start for the Indian markets. This comes amid a strong global handover. We have the US markets which ended higher overnight. Even the Asia Pacific markets that started the day largely higher after Japan's headline inflation remained above Bank of Japan's target. However, core inflation that saw a little bit of a moderation and that saw a little bit of an elevation as well. So yes, looks like a positive start for the Indian markets, but we'll watch out whether or not this optimism sustains throughout the trading session. We will be taking you through what your trading strategy should be at this point of time. And do not forget to post your stock related queries on our live feed and we will try to address them before 9:30 a.m. with our market experts. But first up, let's take a quick look at the top headlines this hour. Stocks close higher on Wall Street. The Dow Jones Index rises over 1%, while Nasdaq Composite and the S&P 500 indices also gain as they remain on track to close the week with gains. Asia Pacific markets trade largely higher this morning, even when Japan's headline inflation for October comes slightly above expectations. Crude prices spike, with Brent rising to $74 per barrel following an escalating exchange of missiles between Russia and Ukraine. Gold prices too climb to one-week high on safe haven buying. The crypto rally continues as Bitcoin breaches $99,000 mark for the first time, while Ether rises 8% on hopes of supportive regulations for cryptocurrencies under Donald Trump's presidency. All right, the last session, that was quite an unnerving one for the Dalal Street because we saw Nifty hit a fresh 5-month low. Nifty slipped below that 23,350 mark. And now we will be watching out a new support zone, that is your 23,200 odd levels. But yes, the sentiment today looks fairly positive. However, yesterday it was majorly soured because of the Adani Group's news flow. We saw Adani Group stocks, be it your Adani Enterprises, Adani Energy, all of them plummet as much as 23% due to its bribery charges by the US federal courts. Though Adani Group have denied the statement yesterday, but the Kenyan government scrapped its airport and energy deal with the group. So the sentiment around these stocks will be watched out in today's trading session as well. We even saw the PSU bank index. The sentiment around that also kind of soared in yesterday's trading session, and they came under pressure there because there were certain concerns of exposure to these Adani Group companies. But apart from that, what stood out was the Nifty IT index in yesterday's trading session. So we will be watching out whether or not they can support Nifty in today's trade as well. On the global front, we have some fresh tensions which have sparked up in the Russia-Ukraine conflict. After Ukraine fired both US and UK based missiles against Russia, Moscow has retaliated by firing the ballistic missiles against Ukraine as well. The Russian president even also came out yesterday saying that they are ready for any scenario, and anyone who doubts that anyone who doubts their potential are wrong at this point of time. So quite a strong statement coming in from Putin that resulted in the spike in oil and gold prices as well. Moving on from the secondary markets to the primary markets, we had NTPC Green Energy's second day of subscription yesterday, which we saw that the public issue was subscribed by 93%, which was majorly led by the retail investors. Even qualified institutional buyers, they picked up and subscribed the issue on the day too by 75%. Today is the last day of the subscription, so we'll watch out for those numbers in today's trade as well. But moving on, let's look at some of the key figures that would set the tone of today's trade. Well, first up on your screen is the option queues data. The Nifty put call ratio rose to 0.94 levels from 0.83 levels in the previous session. So some optimism there for the markets. Second is the F&O ban list that had two new additions. Well, that is your Adani Enterprises after yesterday's sharp fall that has found a new place in the F&O ban list, and the second it comes is your Nalco. Now, the stocks that were retained, that include the likes of Aarti Industries, Aditya Birla Fashion and Retail, GNFC, Granules India, Hindustan Copper and Indraprastha Gas. Now, finally, the fund flows data on your screen. Once again, we can see that the FIIs have remained the net sellers in the previous trading session. Of course, they have crossed the net selling by 5,300 crore rupees. Of course, that 5,000 mark we have crossed in the cash markets in yesterday's selling as well. If you look at DIIs, they remain the net buyers and they have bought stocks worth over 4,200 crore rupees in the cash markets. But just a couple of minutes before we hit the opening bell, if you look at some of the pre-open rates, we can see that there is a little bit of an optimism in the market. Sensex is up about 150 points, and even Nifty is flat in the green. But on that note, let's quickly get on board with the technical expert of the show, Raja Venkatraman of NeoTrader. Raja, good morning. So good to have you on the show. Let me start off. Yesterday we were anticipating Nifty to continue its recovery, but then the Adani Group rout once again stalled its comeback. So can we expect Nifty to see some sustained recovery in today's trade?
Yeah, good morning, Lovisha. Thank you for inviting me to the show. So, the overall scenario or the context that is getting created is some negativity emerging from the Adani Group and some war-based news. But what is really happening is that the markets are tired, so to speak, of going down. And the 200 DMA is fighting quite hard to pull up the market. Plus, the exit poll is going to add some cheer as well. So all that is going to even out the negativity. And also, if you take a look, we are on the last day of the week and last trading day of the week, and at this juncture, more shorts possibly may not be induced today because tomorrow is the election results at Maharashtra, and all these could culminate into some kind of bottoming out scenario. And also based on the time cycle studies which I do, I find that there could be a potential recovery in place over the next few days. So instead of looking to go on the short side, I would like to remain and see what are the stocks that are doing well even in this kind of scenario, and try to remain on the long side instead. So that's the overall scenario. And now coming to important levels which we could track, yes, 23,200 especially in the spot Nifty was something which many of us were tracking, and that's where almost there was a hit right in yesterday's morning where Nifty dipped down into those lows, and then it quickly recovered because the oversold conditions was so much that now we are seeing a rebound. And like you rightly mentioned, the option data is also suggesting that we are right now at a break-even stage, and we should be seeing some relief rally here. This is not a cause for bullishness, but yes, there are pockets of bullishness which one needs to look at. And so, yes, it's a time for you to be a little optimistic because markets are definitely done with the selling. So there could be a recovery, a mild recovery here, and one should like to look for bullish side. And now to lead that, yes, IT has showing some signs. Now I would rate IT, Bank Nifty, and Nifty in the order of recovery, and that's what I'll be tracking. And well, for the next few days, I would like to remain on the bullish side.
Okay, all right. Raja, as you rightly pointed out that, we have been seeing a bit of a loss this week for the Nifty 50 index, but now Bank Nifty, that has been the outperformer so far this week. So what are the new levels that we can watch out for Bank Nifty index?
See, Bank Nifty, first of all, is struggling to cross 51,000. So, on the way up, 51,000 is going to be the first challenge for Bank Nifty. If 51,000 is overall, then you could expect 52,000 to be the next level. So, because there could be a lot of short covering action, and that can induce more rally. So, right now, the whole market scenario is there, like how everyone were on the long side 2 months ago. Now, everyone is on the short side. So, everyone is looking at every opportunity to go short. There have been a lot of forwards saying that 37 sessions FIs have been selling aggressively, etc., etc. Now, all this is inducing a bearish kind of scenario, and people are unwilling to go long. Now, I would say that in the markets, you'll only make money when you are contrarian, and it's a time to be contrarian now. And right now, a lot of short positions have got built, and the rally which I am mentioning is going to be induced by the short covering.
Okay, that's right. Raju, you talked about Nifty IT index that has been doing well in this weak overall breadth market. So, do you have any picks from that space? Any good buying opportunities that you find?
Yeah, I find two stocks particularly interesting, and I would like to ensure that I would like to mention Coforge as one of the picks because it has been doing quite well and it has been managing to sustain the higher levels. It has managed to hold on, and it has managed to the entire upmarket scenario, and it has been able to sustain the moment. So I would like to ensure that say that Coforge is one pick which I would like to recommend at current levels. Coforge has a room for going 500 points from here. So Coforge will be my first bet, and the second bet will be on persistent system, and that is also been holding on to the higher levels. It is right now consolidating, but then yes, I am expecting a move now in the next few days, and that could be a very good pick. So Coforge and persistent systems are two picks on the upside.
Okay. How about Nifty Realty Index, Raja? Because even that stood out well in yesterday's trading session. What can we expect going ahead for the Realty Index?
See, realty index has been waxing and waning. So I would not be participating in the realty index now because yes, when there are shades of bullishness which is seen, then there is some positivity. Otherwise, majority of the times the stocks are getting badly hit. So I would not look to buy into the realty index right now.
Okay, all right. Let's take a quick look at the opening bell. First trades coming up on your screen. Well, we have started the day on a green and Nifty is holding above that 23,400 levels. If you look at Sensex, that is also up about 150 points above that 77,300 mark. If you look at most of the sectors, it's trading, slightly in the green as well as in the red. So a little bit of a volatility which is going on. If you look at the volatility index, even India VIX has spiked up to 11% in the opening rates, 14% right now on your screen. But apart from that, if you look at the IT index, today also it is holding well, 0.4% gain in today's trade. What is not doing well, however, is the FMCG, energy, metal and realty indices. Realty index, of course, it saw a bit of a good uptick in yesterday's trade, but today it has been down nearly 1%. So some profit booking seeing on the Nifty Realty Index. If you look at some of the broader index of the markets, the mid cap and small cap indices, both of them holding well. Mid cap, of course, outperforming in the opening bell. Apart from that, if we look at some of the top Nifty 50 gainers, that includes the like of ONGC, ICICI Bank, Wipro, SBI and NTPC. SBI, of course, Jefferies coming out with a report saying that the asset quality and the recoveries are holding well and will be doing well in the second half of the fiscal year. NTPC also seeing a bit of a gain, given that we have the ARM NTPC Green Energy seeing its IPO and the last day of the subscription numbers coming in. If you look at some of the top Nifty 50 losers, that includes the like of Adani Enterprises, Adani Ports. So once again, Adani stocks coming under some pressure. Adani Enterprises, the parent entity, is down about 4% in today's trade. Apart from that, we can see Shriram Finance, Titan and Britannia to come under some pressure in today's trade as well. Let's take some stocks in focus. First up is your PFC and REC. Now, both of these stocks had corrected yesterday, saw a downtick of about 4% in trading session, but Bernstein has come out with a report. Now, they are saying that they remain positive on these stocks despite yesterday's correction due to the Adani News Group flow. They believe that this correction is a buying opportunity and have shared outperform calls for both these stocks. Raja, PFC, REC, how does the stock look like going ahead? Because we've seen certain exposure towards Adani Group entities as well. What is the outlook going ahead?
See, PFC has been making an attempt, but it has not really managed to generate any kind of momentum. So I would not be a buyer in PFC, and I would look to stay away from it at the moment.
All right,
And the
stay
next
away.
stock you mentioned is REC, right?
Yes, yes, yes.
Yeah, so REC is again in a similar scenario. The power theme did generate some traction earlier on, but then now towards the end of the year, the entire power theme has been sliding down, and it's not best to stay in the power theme as of now because the momentum is not favoring an upside.
Okay, not favoring the upside at this point of time. And today also PFC and REC, both of them are flat in the red in today's trade. But another stock in focus, that is your SJVN. Well, the company has signed an agreement with the Rajasthan government to develop renewable energy projects. It plans to develop 5 gigawatt pumped storage projects as well as 2 gigawatt solar projects in Rajasthan. Raja, the stock has been on a downward spiral ever since July. So what can we expect going ahead for SJVN?
Yeah, SJVN will continue to experience pressure, but yes, on higher time frame charts, it is showing some kind of supports that have been reached. We need to see whether it will rebound from the 100 levels. Now, there is a chance of revival, so those who are already holding long can, average their positions at current levels, but it's not a call for fresh investment. If you don't have a position, then it's not advisable, but for those who have, you can average it at current levels with a stop below 95.
Okay, stop below 95 for SJVN. Let's move on to another stock in focus, that is your Afcons Infrastructure, recently listed entity. Well, the company has been selected as the lowest bidder for project worth 1274 crore rupees from the Uttarakhand Project Development and Construction. Raja, a new entrant, Afcons Infra, it just managed to gain about 5% from its issue price as well. We saw a discount listing on bosses recently. So, any take on the stock that you have going ahead?
Yeah, Afcons is showing some promise, and since it's a new listing, it's moving above its listing high. So it's a good call for participation, and I think that one can participate in this stock. It has got a potential to reach towards targets of around 620.
Okay, 620. That is a promising target coming in for the Afcons Infrastructure. Let's move on to next stock in focus, that is your Protein e-government technologies. Well, the stock is down about 8% in today's trade. This comes amid NSE Investments, which is a non-promoter shareholder, plans to sell up to 20% stake via an OFS. The floor price is set at 1550 rupees, and the issue will be open for non-retail investors today. But for the retail investors, it will be opening on Monday. So, Raja, Protein, it has been range bound in the past 3 months. So, what does the near term indicate for the stock?
Yeah, the stocks will continue to be in this scenario till it is able to move above 2000. So we have to be careful at this juncture for investing into the stock, because the stock definitely shows some bit of consolidation here. But yes, so overall outlooks looks promising. If one has an outlook for the next 1 year, then it can double from the current price.
All right. Any take on Adani Group stocks? Today also the stock has been under quite pressure. How much of a downfall can we see? Because yesterday they have denied the statements, but S&P Global has also come out saying that the New York Federal Court indictment means that there's a loss of investors' confidence in group entities going ahead.
Yeah. So see, in a stocks like the Adani Group, there are so many news flows that keep coming in. And so many news flows that keep coming in. So any kind of level at this point in time would not justify the price action. So it's best that the dust settles down and then one should participate instead of one trying to take opportunity and going by big funds saying that yes, there is room, it is a dip to buy. So I would not buy right now until I see some kind of clarity, and at the moment there is no clarity in the Adani Group.
Okay, no clarity on Adani Group coming in. But let's straight dive into our viewer queries. They've been waiting eagerly and, given in a lot of queries coming ahead as well. Well, the first query coming in from Naveen is on Praj Industries. Naveen is asking, what is the view on Praj Industries? Well, Raja, the past 6 months hasn't been doing well for Praj Industries. Even the Q2 performance was quite negative. What can we look going ahead?
See, Praj Industries has been waxing and waning, and especially from the industry which it is in, it is trying to survive the decline which has emerged over the last 1 month. Now the overall momentum continues to be on the weaker side, so I would recommend the viewer to hold on and have a stop loss below 670.
Okay, 670 stop loss that you are advising for Praj Industries. Let's move on to another stock query. Naveen is also asking his view on Titagarh Railway. Titagarh Railway, Raja, it has been quite off from its record high levels, 1800 odd levels, right now trading at around 1100 odd levels on the screen. So, 1200, can we eye in the near term? What do you expect?
Yeah, see, the railway theme, the defense theme, all of them, they have undergone a major shakeout here. So one should not continue to hold on to that scenario where you will see once again a sterling recovery here. Yes, the recovery may emerge, but going back to its heydays of around 2000, it's going to take a while. So now, if you are holding, the stop loss would be around 1000, and this is not a time to average.
All right, this is not the time to average coming in for Titagarh. Well, let's move on to another viewer query. Debu K is asking the view on Siemens. Past 3 months, Siemens has not been doing well, Raja, but the Q2 was promising, where we saw the profit nearly doubling. What can we expect? Do we expect certain optimism building in the near term?
Yeah, Siemens has been trying to hold on to these levels of around 6500, and it has been successful in that for a while. Now, if 6500 breaks, then we could see depths of around 6000. So it is at a very crucial juncture, and those who are having Siemens can look to add here because your risk for the additional portion is quite low. So that's what would we may take. Siemens is at a good support zone, and any recovery from here can again take it back towards its highs of around 8000.
Okay, 8,000 levels that we can eye out for Siemens. Another viewer query, Hemant has been asking that about City Union Bank. He's been having 500 shares at the average of 135. So should he book profit, or will there be a crossing of 200 mark as well? Well, City Union Bank past 6 months has done quite well, nearly 20% returns. What can we expect going on from here, Raja?
Yeah, the overall setup of City Union Bank is quite good. Bank Nifty is looking to recover from here. And as we speak, 51,000 is about to be challenged. And if that were to happen, then we may see some fresh thrust. It has managed to survive, especially in the last 2 months. It has managed to survive the uh, entire crash scenario of the market. So then you should definitely hold on to this stock because you can expect even beyond 200, a target of around 225.
Okay, 225 target that we'll be watching out for City Union Bank. Let's move on to another viewer query. He's asking, Srivardhan Gupta is asking views on Balrampur Chini Mills for fresh entry. Well, the stock is doing well in today's trade, but after the October highs, after 31 October, I think it has been on a downward spiral. What can we expect going on from here? Any fresh positions that you advise?
I would not advise any fresh positions. The stock is trying to rebound from lower levels, and at the moment, it is having a challenge. So, yes, the sentiment has been ruptured, and the sentiment more is towards the negative side. So, I would not advise fresh buying here. And the best scenario to approach this is exit on the rally because it is going to take a while for the rally also. The rally levels are around 570.
Okay, 570 levels that we can eye out for Balrampur Chini. Let's move on to another stock in focus, that is Hemant is asking the view on Tech Mahindra. Well, Tech Mahindra stock has been doing well in the past 5 days, Raja. The Q2 results were also quite promising for Tech Mahindra. What can we expect? Any new targets that we can eye going ahead?
See, Tech Mahindra has not really shown any kind of a positive trigger over the last 6 to 6 months. So yes, it does. It tries to rebound, and then at higher levels, it is giving up. So I would not advise any kind of fresh additions right now. But yes, the stocks is looking promising, and I would wait for it to cross 1700 to make any kind of a judgment.
Okay, 1700 levels that needs to cross. Let's move on to another stock viewer query, that is your Sadhyabaji has been asking the view on Canara Bank. Canara Bank, Raja, past 6 months hasn't done well, down about 16%. What can we expect going ahead for Canara Bank?
PSU banks have been subjected to some intense pressure, and the pressure continues to build. So at this juncture, getting into a PSU bank would not be the best idea. Yes, the overall higher time frame setup also indicates a similar scenario. Yes, there is some bit of supports that have been reached, but then unless and until the entire Nifty moves ahead, it will not be possible for us to make any conclusion. So, best to stay put if you are holding, but no fresh entry is what I'm suggesting.
No fresh entry for Canara Bank. Let's move on to another stock query. That is your Altaf Hussain. He's been asking the view on should we invest in UPL? If yes, should I sell it before 26th November or stay until December 5? Please let us know. UPL, yesterday it came under focus after its rights issue as well. Yesterday also it saw quite an uptake. Today also it is doing well in today's trade. Raja, what can we expect going ahead? What can the near term hold?
See, UPL is a stock that is inherently bearish. So every time there is a rally, there are some shorts that are getting created. So UPL is definitely not on my buy list.
Okay, UPL is not on your buy list at this point of time. Okay, another viewer, Rajesh, he's been asking the view on HCC Infra for the next 1 year. Hindustan Construction, how do you think the charts have been holding well for HCC?
HCC, again, like I said, the real estate is not a preferred sector, and the sector is under some pressure. And I would continue to maintain that because the overall momentum is quite tired, and it's not showing any kind of action. So it's best that one doesn't participate in HCC.
Okay, one shouldn't participate in HCC. Let's move on to another viewer query. He's asking the view on Chennai Petroleum. Chennai Petroleum, the stock is not doing well, be it from 3 months or even 6 months perspective. Raja, even they recorded a dismal Q2 performance as well. What can we expect for Chennai Petroleum going ahead?
See, the entire oil and gas space have gone through a rough patch, and the rough patch continues to extend. So now Chennai Petro cannot be, ab- absolvent of the entire movement. So it cannot be, it cannot ignore the selling pressure here, and this selling pressure is impacting this particular stock as well. So yes, the trends have turned to the downside. So those who are having positions should exit and should not re-enter at this juncture.
Okay, should not re-enter at this juncture. But with that, just a final question before we let you go, Raja. That is, what is your trading picks at this point of time? We are seeing a lot of volatility going on, swings of performance between Nifty. So what are your trading hours picks?
Yeah. So one stock which I would, so what I have done is I have taken a theme of where stocks that I managed to hold on after the results and also in this aftermath in the last 1 to 1.5 months. So I'm going to recommend two stocks, one from the banking space, that is Federal Bank, which came out with a decent set of numbers at the current levels with a stop at 205 for a target towards 218. It has been holding on the higher levels, and from there it is showing some good momentum on the upside on the daily chart. So that's the first pick. The second pick is Indian Hotels. It has done well yesterday and continues to move on. So again, this stock at every dip has seen some good buying opportunities. So one can buy at current levels with a stop at 778 for a target towards 799.
Okay, so Federal Bank and Indian Hotels, top trading picks at this point of time. But with that, we have to let you go, Raja. And thank you so much for giving out your time and answering the viewer queries. We hope that we connect with you soon.
Thank you. Bye.
All right, let's take a quick check of the markets and move on to the next guest of the show. Well, Sensex and Nifty, both of them have been doing well. The buying has been extended and Sensex is above that 77,700 mark, up about 500 points. Even Nifty is doing well. It has crossed the 23,500 levels that we were eyeing out for, the resistance level that we were eyeing out for today's trade, and it is up about 150 points in today's trading session as well. Well, a lot of the sectors are doing well. All of them are in the positive territory. Nifty PSU Bank, especially after yesterday's profit booking and yesterday's fall of about 3 to 4%, it is up about 2% in today's trade. Well, of course, SBI, one of the major triggers, SBI is doing well after the Jefferies report as well. India Wix, that has cooled off. It is down about 3% and trading about that 15 odd levels. If you look at the broader end of the markets, that is also doing well. Mid cap and small cap indices, both of them holding strong and taking 0.7% gains as well. Of course, the top gainers of the Nifty 50 include SBI, ICICI Bank, HDFC Life, Apollo Hospital and Grasim. And of course, in the top Nifty 50 losers, only 3 Nifty 50 losers at this point of time, Adani Enterprises, Adani Ports and Axis Bank. So yes, so with that, let's move on to the next guest, fundamental guest of the show. We have Hemant Shah of 7 Islands PMS. Hemant, good morning. So good to have you on the show.
Thank you, Lovisha, for inviting us, and congratulations to you and the team for 1 million subscribers. I mean, keep spreading the knowledge as always. Thank you.
Oh yes, of course. Thank you so much. Hemant, let me start off. The plenty of volatile situation happening on the global front. We have the rising
Lovisha,
dollar.
sorry. I think the audio is not clear. I'm not been able to hear. Sorry.
Can you hear me now? Is it better? Okay. Okay. All right. Okay, let me start off with the first question, Hemant. Plenty of volatile situation which is happening on the global front. We have the rising dollar, we have the yields, and then we have the Russia-Ukraine tensions as well. Yesterday also we saw a report by Citi saying that Nifty could take another 10 months to reclaim that 25,000 mark. Do you concur with this feeling?
So, if I heard correctly, I think the markets have been volatile. And
Yes.
I think what we feel is market should settle down here, somewhere here. Maybe market should find its feet somewhere here. I think all the negatives are being factored in. It is being factored in at lower levels. The corrections are steep, but I think the market should find its feet somewhere here around 20,000, 23,000 index. And I think the process of going again back to upward trajectory will be a little bit slow, and it will be stock specific rather than any sector specific. But overall, the trend is going to be positive from now on. And keeping an eye on the rupee, particularly keeping an eye on the dollar index, I think we are optimistic and cautiously optimistic going forward. Lovisha, I think I have answered it, but I have not heard the question. I'm sorry.
Okay. No, yesterday, Hemant, we had a report by Citi that also said that, Nifty could take another 10 months to reclaim its 25,000 mark. So I was asking that, whether or not you concur with this feeling.
No, I think Nifty will find its support somewhere here. I think the new highs are a little bit far away. This is what I feel, because every rise, we feel that there will be some selling. The FI selling is not yet even slowed down, in fact. Okay, and I personally feel at every higher level there will be selling. So to cross the Nifty for the new high, I think it will take little time, maybe 2-3 quarters, But there will be many stocks which will definitely cross its previous week highs on the basis of the financials, fundamentals, and the growth prospects. So rather than focusing on any sectors, I think even we as a fund, we are focusing on stock specific growth stories rather than focusing on any sector specific growth stories.
Okay. All right. Hemant, you said that, it is going to take a long time for the Nifty to cross that new lifetime high as well. Now, everyone is waiting for the FIs to come back, but so far this year, they haven't really been a major buyer of India as well. So what does the strengthening dollar and the yields and, of course, the Trump's comeback to White House mean for the Indian markets?
Lovisha, I think still the audio is not clear, but I'll try to answer. See, FIs have just sold around 1.5 to 1.8% of their holding. And I don't think the FIs are going to jump in to buy again in the Indian equities very soon. And the only argument here is the valuations are not that attractive, even at the current level, even after the fall. So valuations are definitely better than what it used to be 2 months back. But I think it is not at a lucrative or very attractive level for the FIs to invest again and come in the Indian market in a big way. I think there will be gradual selling is going to continue for over the next maybe few months. But having
Right.
said that, stock specific actions and growth story of India is definitely very strong. I think it's likely to continue. It is the only visible growth story. I mean, 7% GDP in the world with such a large economy and predictable GDP growth, which is very strong in the making. And I think Indian markets will do well, but the new highs will take some more time, maybe 6 months, 7 months, as I said, to surpass the new high. It will take 6 to 7 months, I feel.
Okay, Hemant, we were waiting for the valuations to get attractive for India because everyone has been talking that how India has become expensive against other markets. So now that we've had the 10 to 11% fall from the record peaks, do you find that the valuations have at least become nearly attractive?
Yes, so valuations technically have become attractive. So in fact, even the results of this season, if you see, Lovisha, the results have been reasonably good. I mean, I would say the disappointment is just because of the valuation. The valuation of the stocks are quoting at say FY27 financial profit numbers, and we are in FY24-25. So the valuation is much higher. The anticipation and expectation was much higher. The actual numbers are absolutely decent, in line with our expectation. And I think, as you said, the valuations are comforting, but it is not as comforting that FIs or funds will invest, just with two hands. I think the investment, the next year, 1 year, what we foresee is stock specific investments will attract investments by the FIs and even from the mutual funds. This is what I feel. As a sector, for example, say railways. I mean, in 2 years back, the whole sector gave a fantastic return. But if you see, the whole railway sector is corrected by almost all the stocks in the sector is corrected almost 30 to 35%. And I think now, from now on, I think one or two railway stocks are going to outperform the sector as well as the company's profits. I mean, they are going to outperform in terms of reaching to new highs and performance. So I think the sectoral move has been done. I think we should focus on the stocks.
Okay. Hemant, you pointed out about how railways have become attractive after the recent market fall. Defense was also quite a theme that was playing out in the initial part of the year as well. So, what do you expect on the defense theme?
Yes, I think the defense theme is definitely played out. In fact, it has been playing out since last 2 years or so. Defense theme, I think we are in the middle of the theme. I think even the stocks have also corrected in the defense theme, but we'll have to I think, stick to the leaders. The order books of all the PSUs majority is definitely strong, but I think as a PMS provider or a fund, I think we are focusing on the whole value chain of the defense rather than focusing on the HALs and BELs of the world. I think we are focusing more on small companies who can cater to who can help the execution of HAL's order, and they are also in the supply chain, and they are also a critical part of the whole defense theme. So I think the second line of the defense companies we would be interested in focusing in, rather the mid-cap companies in the defense theme. The actual execution will start now. The order flow is now done. Order flow is again increasing for all the top big companies. They are going to outsource many of the products from these small companies, where these small companies are going to benefit in terms of volumes as well as profitability. I think as a theme, this is a better placed investment opportunity. This is what we feel, Lovisha.
Okay, Hemant. Hemant, also about FMCG space, how does it look like? Because after the Q2 results, the big headline was, how the urban consumption has been slowing down. So, what do you think about the FMCG going ahead in the upcoming quarters?
Yes, I think the FMCG space has been underperformed. In fact, underperformed in terms of expectation. The volumes are a concern. But having said that, India is a large country. I think as a theme, it's going to play out over a long-term period. Short-term challenges are always there, bump-ups are always there. But I think FMCGs, again, the valuations are reasonably high. So the returns or the rewards, if we invest today, I think it's not much. It's a defensive kind of a play. I think we can balance our portfolio by investing in this FMCG companies rather than buying a growth story. So I think growth will take some time, Lovisha. This is what we feel. I think it's a hold for us rather than jumping to a buy for the whole sector first.
Okay, okay. How does the quick commerce players stack up against these names? You know, be it like the Zomato, Swiggy, Honasa Consumer. How does the quick commerce players look like at this point of time?
Yeah, I think what you said is right, but just you know, the Zomato theme has been playing out since last 1.5 years. The listing of Zomato has started this new age companies era, and Swiggy is just following, I think, the path of Zomato's valuations, right? The profitability, I think, for Swiggy is little bit far from even I think we are 1.5, 2 years away to sense the first profit. So as an investor, I think we would be interested in investing in profitable emerging companies or new age companies. I think Zomato, we had invested in the 1.5 years back, but we have exited the company because of the competitive landscape as well as the valuations. I think we find the valuations are not attractive. The risk reward ratio technically doesn't seem to be fitting in our favor. But having said that, there is, I think if I may give an example, there is a company called Zaggle. I mean, again, it's a new age company. This company has tremendous growth prospects. I think 30-35% CAGR growth can be expected from this space as well as this company also. Having said that, the valuations are definitely not in our favor, but still higher valuations are justified because the growth is going to be there for the next 2 years. So we do track new age companies, but we are very selective in investing in this new age companies. Profitability is our objective. If the company is profitable, then we take into our consideration for investment, and the valuation plays a big role for us to decide. Yeah.
Okay, okay, Hemant. Hemant, also, how does the chemical space look like? Because after the Q2 results came out, there have been reports and experts saying that there can be recovery in the upcoming quarters as well. So what do we expect from the chemical space?
Yes, Lovisha, chemical space as a sector, will have to be very stock specific. See, frankly, we will not invest in any companies in chemical space which is dependent on Chinese pricing and Chinese dumping, right? So it is very difficult for Indian companies to compete with the Chinese prices and the volumes. I think we should focus on niche pharma companies who are specialized, who in fact competes with China in the global market in terms of exports, and these companies do export some products to China also. But I think very few companies are listed. Having said that, I think the pharma space and especially the CDMO space seems to be far attractive to us rather than chemical, Lovisha. Because the CDMO theme and CDMO space, I think Indian companies are doing really well. There are good listed companies. Of course, the valuations are high, but I think we do anticipate very good growth going forward for the CDMO space in the pharma space, in the pharmaceutical industry. Lovisha.
Okay.
Rather than
CDMO.
chemical, I think we prefer CDMO space.
Okay, CDMO space that you prefer right now. Hemant, just one last question before we let you go, because we spoke about how there can be a little bit of a difficulty for the markets to achieve a proper new lifetime high going ahead. So what can be the next trigger for the markets going ahead?
Sorry, I missed the last line. Sorry. Again.
What is the next? I'm asking, like, what is the next trigger that we can watch out for markets going ahead?
Still the audio, I'm just guessing the question and answering frankly till today, till this time. I'm not been able to get the question. The new highs will take some time for sure.
Yeah.
But
So
I
like
think
what can
there are many companies. As I said, the CDMO space looks very interesting. I think the companies in this space, niche companies, who has capability to export and be competitive and profitably competitive in the world. I think we have many good investment ideas in India. I think that's a very good theme. This sector plus few companies in the infrastructure space. I think we are very positive on Indian infrastructure space. I think there are many companies having good balance sheet, having good growth prospects and good order book, will definitely post very good numbers going ahead, and highly likely that they will outperform the index, and I think the new highs will be crossed for these companies in the sector. I mean, sorry,
Okay.
I think if I have answered it correctly.
I think there's a little bit of an audio glitch right now, but with that we'll have to let you go, Hemant. But thank you so much for your time. We hope that we connect with you soon as well.
Thank you, Lovisha. I think the audio is still not clear. I'm so sorry. Thank you.
That's okay. Yeah. I'm so sorry for that. All right, let's take a quick check of the markets. Both Sensex and Nifty have been doing well, but of course it is off from its day's high. Sensex is up now about 300 points, while Nifty is above that 23,400 levels. It was above that 23,500 levels, but it has come down and it is above that 23,400 odd levels. Apart from that, most of the sectors which were trading in the positive territory are seeing a little bit of cuts, like for example, auto and the metal indices have come under pressure. India VIX also has spiked up. It has spiked up about 1% in right now in today's trading session. Mid cap and small cap indices, both of them holding strong and holding well, but of course off from its day's highs level. But we'll watch out how the markets pan out in the rest of the trading session. But for now, with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks are in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.